Hey, what's going on? Welcome to this video of us coming up to the end of the week and looking at price action. Again, that's what we do here on Gibraltar is analyze price action and look for the best opportunity for you to be able to take advantage of the price action that's placed in front of you for that day because we are day traders. That's what we like to look at. Now, we do also look at longer term investing. That's kind of the easier way to grow wealth for yourself over time, is constantly putting a little bit in there, and really don't even need to really learn any of this stuff at that point. It's just a matter of finding the right assets and just putting X amount of capital in there off of each payday or every Friday or once a month or whatever you decide to do. But we're not here to really give financial advice. We're just talking heads here on the computer or TV or phone, wherever you are watching this. Anyways, let's go ahead and dig into price action and kind of see where we're at after a Friday and kind of coming into the weekend. And it was a nice run up. We hit some key levels. We hit the major areas that we're looking for. Now the price action is showing exhaustion. It's kind of showed that all throughout the day. And I know a lot of people got hurt because they were buying the top. They were fear of missing out. And they thought everybody was talking about it's going to go up to the 80 something thousand, even like 78,000, kind of crazy type numbers, even though we pretty much hit that. But I know I did hear a lot of crazy stuff throughout the week. So let's go ahead and dig into price action so you'll know exactly what's going on, though. That's the goal here. So yeah, go ahead and like and subscribe. Go ahead and put any questions that you have in the comments and we can help you out, or I'd love to just hear what you have to say. But let's go ahead and jump into the charts here. We're sitting on the 15-minute. You can see that we are rolling over. It's on Friday evening. You're probably going to be watching this here when it comes out on possibly Saturday or Sunday. So hopefully you're taking this and going back through price action and analyzing it and see what happened, and you can catch all those moves. So let's go ahead and take a look at really where things are at and what is going on with them. So I'm going to go ahead and just remove some of this just so it's cleaned up. You can see here's our levels for the day. Right up here is our breakout trigger. Right down here is our breakdown trigger. And let's open this up a little more. You can see how price action had come up and started to float sideways. And we came up into all day actually kind of sat sideways for Thursday. It wasn't really exciting. And then at the Friday, we just got this little run up. Now the energy kicked up pretty hard right at the beginning of the day. And this is where kind of just looking at price action ahead of time when things are going to open up, right? Started to run back down. It tested right in the key levels of our moving averages. So this pink colored line, kind of pink red, is the 50 exponential moving average. This purple colored line is your 30 exponential moving average. And then the white line is a 21 exponential moving average. And then you have a 9 on the screen, which is an exponential moving average also. The only one on my chart that's not exponential moving average is this 200 yellow line, and it is a simple moving average, an SMA. So I use these because these are your kind of your moving Fibonacci levels. A lot of times when price action moves, you can see how it interacts with them. A lot of times it's really, what I'm really watching is how it interacts with taking price action on the 21 and the 9. The 9 tells me when it's going to reject, right? Here it's showing its explosion. And then here it's curling back over. Kind of tested it right here, which there's your first higher high, tested it, bounced up, took out the higher high. It's giving you exhaustion. Those are also exhaustion signals. Then it came back down. This is where you should have exited. If you were just going to be doing that, that's what that's for. You can see it bounced on the 21, and then it's just really traded flat. Didn't really have the energy to go up higher. Now our indicators were telling us it's exhausted. Definitely traded, even though it was going up, it showed the exhaustion here on the 15-minute for a while. So anyways, those are kind of just moving averages there. But let's go ahead and get into the levels here and how you could have taken advantage of a trade, just because we don't need to get into all that TA, right? Let's go ahead and say, well, we need the candle, 30-minute candle to open if that's what you were looking for. Now, what I liked about this trade for myself, that's why I was kind of talking about the moving averages, because it came back and tested the 50 on the 15, and then it started to move. And I know a lot of people got hurt because they were trying to run tight stops. That's why we always run pretty healthy stops. So when this price action moved, I was pretty excited if we can get the close above. So I got the close above. So I did actually get in the trade here on my 30-minute candle on the pullback. And this is how I entered into this trade. And then I took it to target 2 is what I was looking for because of the setup. It was a nice pull. I knew it was getting near the top. Is getting to exhaustion. Target 2 strong for exhaustion. Really was watching it here also when it started to play with target 1 and just saying, hey, maybe I'll just take this off. So this was the trade for today, and what we looked at taking, and that's just reading price action and getting advantage of it. And then you, of course, I wouldn't have been greedy like I was pointing out. Like a lot of times people were saying it's going to go up higher. I mean, I wouldn't even been too bummed out if somebody just took a target 1 and ran with that cash. That's really smart too. Now, if we go into the 5-minute, that's really where you're going to take the entry regardless, because the 15 is really just did it happen, right? Did we get the execution of the trigger? So yes, we did. We got the push through. And then the 5-minute, you can see here's your 9 exponential moving average. See how it sat on it? It did wick down. That's why I was excited, because it filled me because I was going to be greedy here. And it wicked down and it came right back up, got that nice close. And then you can see how it traded right on the 9 moving average, exponential moving average. Now, the 21 really for the 5 is my exit. So if I was going to be following that rule and I didn't want to take it at 1 and I wanted to get it up here, now it obviously came up and it took me out of target 2 anyways, but if I wasn't out, I definitely would want to take it right here. And you can see that this was the breakout move right here. It came really strong to target 1. Then this is when it flagged and then ripped again. So this could have easily flagged down for a while, then came up. So it is, to me, it always is interesting to see where it came back through the 21 and really where you could have exited. It's always kind of fun to see that, really. So if you were taking it right here, well, really the pullback wasn't much different from the guy that took it back here. Now, if I take it here, that's a 0.77 to 1. Obviously, if I took it at the target 2, you'd have made 2.36. Like I've said before, and let's just make it easy, $100 on this trade, you would have made $236. Not a bad day. And then it set the higher pattern here. So this was your first high. Everything was rolling over. It shows exhaustion. This is where the fear of missing out, everybody kind of jumps in. To me, I just call this my second chance. If you didn't get out here, you better get out here because that is over with. There is your top. Took out the liquidity that everybody that tried to short early. And that's exactly what typically happens when you get the second run up. So what people do is they do this. They say, oh, it's going to start breaking down. They jump into this. They put their stop right up above this area because that was the high. And then they run this down and they're like, wow, an 8.5 or whatever to 1. They're all super excited. And then it comes and knocks them out because this is the classic come take out the guys that are trying to short the market early. Now, what you're looking for really is going back out to that 15-minute. And ultimately, if you want to be a little more advanced, you're kind of waiting for this to break down and get the cross like we're seeing right now in the price action. See how the exponential moving average has been sitting on top of the 21, but now we finally got the cross. Those are your bearish crosses that are starting to happen on your moving averages, and you can see this is starting to put pressure on the breaking down. The other thing is all our indicators now are all rolling over. They've been rolling over. They want to crash. And if you go out to your 1 hour, your 1 hour has kind of been your fuel in the tank. And you can see this ran up. We were topping out. It even said that it was done here up in this area. It showed exhaustion. We got the wick up through, like I was pointing out. Then it started to roll over. These are all extended. Price action likes to come back down and draw these back together. See how they're drawn together right through here. Now this has been a rough week. I won't lie to anybody. If you were trading and you got stopped out and you kept trading, that's good because that's really the guy that's going to stack up. This last few weeks have been pretty rough even on me when I've been trading, but I've been sticking with it. And to kind of give you an idea, I can even trade myself at around a 45 to 55. So 45 success rate to a 55% loss rate. and yet my account's still growing. Well, why is that? Because when I'm taking high probability trades, I'm also when they run, I'm averaging an R risk to reward around 1.5 to 1.6 on the reward. So for every dollar that I put in the market, I'm basically making $1.50 back. Is really what it is. That's why I can, make a right in a rough month, you can still trade. When you're flipping the coin idea, you called it wrong more than you called it right, and yet you still are winning the game. People always have a hard time with that, but that's why we practice this price action. And when the probability is in your favor, you're getting in. So when it runs, you're getting into these big runs, these big movements. You're getting into these, so you're getting the high returns. So you might be making that 4, 5, 6% or rate of return on your investment, and then there's other times where you're taking a loss, which are smaller losses. So that's kind of what I was pointing out there. I've actually taken more losses than gains recently, but I'm still in the game. That's just the name of it, like I pointed out before. So as of right now, the 1 hour does show it's rolling over as well. The fuel wants to come down. It's topped out. It's giving more fuel for the downside. Now this is typically, once we're in this, we're moving bullish, and you might be like, well, yeah, how do you know that? Well, let's go into those daily. The daily actually is sitting really good. We have some strong crosses through our moving averages. Now, this current candle that we're sitting right now is about to close, and this could come back down and sit back down in this area. That's not a bad thing. Or sit back in this area a little bit, get some energy, maybe trade down over the weekend, and then we can run up next week, and that would be fine. But we did get the 30 to cross through its 50. So the reason why I'm pointing that out is because what I like to look at is it's a stacking behavior, getting through the trauma. And what does that mean? What do we need to see? Well, this is the start of the bullish coming out of the bears going into the bulls. And we got the 30 exponential moving average crossing the 50. Well, that's the start. Then you'll start seeing these all crossing. Price action will get above the 200. This is all bullish behavior we're looking for. Then we want to see this white line, this 21, cross through this yellow line, and then we're excited. Now we're on pretty solid bullish. I'm leaning towards that direction right now, though, because we're stacking in that direction. That's what we want to be seeing, is what we're actually going through right now. We're starting to stack the bullish things that we needed to see. And let me go out a little bit on this and point out why were we bearish and why we hold bearish. Well, right here, you finally got the cross. And you can see it fought through this area right here. This was August, and in October, we finally got the punch, and it was right here. And then this lost. See how it lost the 200? The 21 crossed through the 200, and you also got the 30 to cross through the 50. It just all happened where they were getting really close when it happened. So it was really quick. You saw the fast movement down because of it, and now we're building back up through it because they all expanded away from each other. So just like when this crossed and all went bearish, then we were in bearish mindset. And people are always like, well, it's going up a little bit. We're bullish. Why? We have to see the start behavior. Well, now we're seeing it. So now the reason why I'm pointing that out is because of that, right? Like right here, people were getting all excited, and then it fell again. Everybody got all frustrated. Well, the price action never gave you one option of going bullish yet. You can see that this line stayed red, which means we never got the first 30 crossing through the 50 to even start it. So you can see it's got tight, crashed again, right? Now we're getting tight right here, but we're actually getting this first signs of that bullish behavior. So we can get excited now on the weekly or in the daily, which is going to bleed into the weekly, the monthly, all those time frames. It also helps us trade back down into the lower time frames. Are you going to, when the longs go and run, are you going to let them run and take more profits like I was talking about earlier? And then when they want to short, you're going to take your profit quickly. It's the opposite. When we've been in the bearish behavior, the macro, more bullish or bearish behavior and less bullish, you're doing the opposite. You're letting the shorts run long, and then when it started to pull back, you took it long and you took your capital out. So you were running on both sides. You're always trading either up or down, but you're being more aggressive on one side or the other. So that is what we're looking for. So yes, if you're looking at this now, if you're going to be taking this as a short, this may short down, but is it going to just fall out? it could. I mean, but it's getting harder, right? We had to get through these key levels. We got through them. We got the 30 crossing through the 50 on the daily. Now we're going to start looking for it to start running up and testing its 200. It's already done that on the other time frames. Like, where are we at on the 4 hour? Where's that yellow line? It's down here now. Where is the 8 hour? It's down below it. Here's the 22. It's down below it. Now the 22 kind of mimics the daily. A lot of times what happens on the 22 goes in the daily. Well, what happens on the 22 back on April 8th? The 22 got the cross. It even tried to cross through this zone right here. It was trying. I was pointing that out back on those videos when I was recording. It was already trying to do this. And then we got the cross. Now we have the strength, and now the daily is starting to finally follow. We are getting some cross through here. This is another. This could give us a pullback because this has been coming down so hard. A lot of times it has to kind of flatten out. Price action kind of comes back into it. So this is what I kind of see us moving back into. This kind of giving us possibly a pullback down into the 75. It could even pull back into this lower area as this rotates and price action kind of plays off of it, and then goes ahead and runs. We do have a little bit of life left in our indicators, our tools, for this to go up. So we could see that happen as well. But all right, guys, talked quite a bit on this video, showed you quite a bit, showed you levels. Why are we looking at what we're doing? Why we're getting more bullish, right? What's going on right now, what we're kind of thinking about. Also gave you some stuff to look for. Practice, practice, practice. Get your hands in this. That's the only way you're going to get good at it, is using and doing and visually seeing as you play. That way you can take advantage of price action that you see right here. This is the golden setup, right? It ran off the 200, came back and tested key level of support, and then here we go, and it did a nice run up, and boom, 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 made the money, and you just continue to stack every day and building what you're looking for. So, all right, you guys have a good weekend, and we'll catch you in the next one.